This is Tim Wegman with BIS Commodities. Just taking a look at this week in review. The week of the 15th of November. Let's just start out and see where we closed here for the week with commodities. Corn closed 6 cents lower in the December contract at 371 and a quarter. Beans was down almost 13 cents on the week at little over 918 in the January contract. Wheat. Down 7.5 cents, just shy of 503 in that contract. December cattle was down 15 cents on the week, pretty steady week there at 119.10. December cattle futures, December hog futures down 92 cents at 63.20. Oil still trading at the time of this broadcast, but looks to close maybe 50 cents a barrel, fairly steady this week in the December contract at 57.80. The Dow pushed out to new all-time highs again, flirting with the 28,000 mark, still trading up over 300 points on the week, and it looks as though the dollar is going to close about 30 some points lower in the week, last right around 97.90 mark. So let's just take a look at corn futures here, where we are for the week. Very quiet trading range for most of the week. Had about a 5-cent trading range in the December contract, following last week's Friday's report. That's the monthly supply and demand report last week, and had a trouble pushing it one way or another most of the week until today. We were able to push it down next week, I guess. When we take a look at fundamentals, we know exports are poor. They're at 30 plus year lows at this time of the year. We're still early in the year yet, but we need to see some demand improve as far as corn exports, even though they are only 13 to 14% of our total demand. They are poor to this point. On the other hand, seeing very strong local basis. So we're still seeing 5 under here in town. That's Cedar Rapids, Iowa. Very strong still for the gut slot of harvest, considering that we still have a chunk of corn to get out in this part of the world. From a national perspective, we're 66% harvested. It's going to be tough to get the rest of that out with the ongoing LP shortage or lack of transportation for LP. So we look for an extended harvest out here. While we're doing this, we are continuing to grind more corn. A smaller crop this year combined on that. There's more space available later in the year. I do look for basis opportunities moving forward. I think basis continues to stay strong. And you'll see some basis here locally again, Cedar Rapids, as this crop gets put away. Taking a look at the managed funds, they're short about 100,000 contracts, about 110,000 contracts. Nothing out there to scare them out of their shorts at this point. I think in order for them to cover right now, we're going to have to see some export demand improve. The supply bowl is done until January at this point, so we're just going to keep an eye on demand here over the next couple months, and we're going to look at those exports, and we're going to look at local basis levels. So if we do see the basis continue to firm up and the spreads come in, maybe you get a little support in the futures market. We may not see that until the December contract goes in delivery, when the commercials can get their hands on paper. Yet to be determined. Soybean futures, taking a look at the technical aspect of that. Right now, we're stuck right in the middle of the October highs in the January contract and the September lows. So we're right at the 50% retracement mark. We were able to bounce off that this week. That's a good sign technically. We did not close on the lows this week, even though we were down on the week. We were able to pop up there. We've seen a little coming back to unchanged or so here in the day. That's a positive sign anyway, as far as the techs are concerned. I think a lot of this over the past week too was managed money was long going into this report last Friday. They didn't get to see they didn't get to see a bullish report, and I think what we've seen there is them blowing out of their longs, the weakness this week. I think that'll be the key next week to be able to hold these retracement levels, specifically that 9/11 low in the January contract. Taking a look at the fundamental side of things, 85% of the soybeans are harvested according to the USDA last week. The question is how much got done here in the northern west corn belt before this last snowstorm come rolling in. The last of those beans are going to be tough to get out, still a few beans. And our part of the world here, not many though, to come out. And as we move forward, there's a few different irons in the fire as far as soybean fundamentals. One, we have South America trying to get their crop put in, trying to get things ramped up down there. So we'll continue to keep an eye on South American weather. To this point, looks good. There's no complaints, no concerns. We'll continue to monitor that as far as rain is concerned. The other item out there certainly is the ongoing China trade talks. What headline, what tweet comes out that's positive for the market and followed by a negative one, and or vice versa. So it seems to continue to move the market around as well. So those will be the drivers. Also, the supply situation here obviously is wrapped up in the U.S. and we won't get our anything as far as supply is concerned until we move out into that January report. Exports have been pretty good to this point, so we are ahead of last year's pace so far this year. So we'll continue to monitor that. Cattle futures. December futures closed pretty much steady on the week. It's interesting. Feb and April cattle futures made new highs. Actually took out last week's lows as well, and settled fairly steady on the week as well, maybe a hair lower. So as far as futures are concerned, probably in a little bit of an interesting area here. The market has been extremely overbought to this point. Maybe you could see a little bit more retracement coming in next week. That's certainly a possibility when you take a look at it from a future standpoint. Cash this week was, for the most part, still trading out there, but it looks as if it's going to be steady for the most part. Continue to see very strong boxes with choice up over 240 this week. Strong demand out there in that market. So we'll see what cash does next week. Early thoughts are steady cash trade into next week, and keep an eye on those boxes. Did we see the highs this week or not? They may give us a little bit of a sign next week. So when I take a look at the cattle futures here, we're probably due for a little bit of a setback, but April futures have been able to hit $1.30 in that contract going back to 2011. So I feel positive on setbacks that we could see a little bit more strength in these deferred cattle futures. Looking at hog futures, the volatility continues there. Even though we got a volatile hog futures or market right now, seems to be over the last 2-3 weeks we are succumbing to a little trading range in there. It seems anytime we want to pull out of that range, we get sucked right back in, or the futures continue to get sucked back in. So I think that'll be the key here to keep an eye on as far as charts and techs. Cash was down $2.12 on the week. The cutout was up over $4.90 on the week. So we're still seeing a huge discrepancy between what the packer is getting paid versus what the producer is getting paid. In fact, it's projected packers are making over $90 a head right now. So very, very good packer margins out there. One would think that should support the cash end of this business. We know production is up, but we also know we're exporting more pork as well. We're projected to export more as well, and we're exporting to China. Our exports to China are at all-time highs, even with the trade tariffs still in place. So obviously this is due to the swine fever. Yet to be determined how bad things are over there, but we know this week that China did lift the ban on American poultry over there. So there is a demand for protein in China. I think longer term that should help support things. It's certainly a volatile market, and keep an eye on those ranges and the charts. I think that's the best way to monitor it. If you can pop this thing up and out of here, that's a good sign. I think weakness is possible still, but the one thing is for certain here is volatility will still reign king in the hog futures. If you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.